I'm Eric Iwanski. This is Nick Cry. We're financial advisors here at Midwest Financial Group. Nick is going to discuss term insurance and permanent insurance and kind of go over some of the basic differences. And we'll let him start with term and we'll go from there.
Thanks, Eric. Appreciate it. Yeah, so term insurance is, like it says, it's a specified term, a duration of time. You can go from 10 to 30 years depending on your age. And within term insurance, there's two primary types. There's regular term insurance, which is the lowest cost, and then there's return of premium term, which at the end of that term duration, you get your premium back, plus typically about 1% in addition of the premium. It's really important when you're looking at term protection that you look at your total risk, what you're trying to protect against. In a situation of like a husband and wife who are protecting each other from the risk of premature death and maybe having to pay for the mortgage, put some kids through college, and pay off any other debts, you want to look at the total amount of risk you have and try to get as much protection as possible for the lowest cost. And term is a great tool for that. Regular term insurance, whether it's 10 or 30 years, is going to be the lowest cost for that total amount of insurance. So also when you look at what's your total insurable capacity, if you're thinking you're going to make more money, maybe have more kids, maybe have a bigger house, and right now in the moment you need $500,000 to cover all those perceived risks, well, what does it look like to add maybe $250,000 or $1 million of total coverage, because you will have future risks as your income increases, as your home increases in size, as your family increases, and you may not be insurable in the future. So if the insurance company will offer you $1 million of coverage, you should take that, because that's the amount that they're willing to offer you, and if it fits in your budget and it covers your current risk plus leaves room for future risk, that's important to consider. Also in that same conversation, you need to think about, is your term insurance convertible? When we're working on planning with our clients, we're looking at what their risk is right now, what their insurance need is right now, and then we look at, if you have a different insurance need in the future, 20 years from now, does it make sense at that time to look at a different product? If you're insurable, absolutely. There may be a really great product that we need to be looking at for your insurance needs at that time, which might be long-term care planning, life insurance for succession planning for family business or for legacy. But if 20 years from now you're no longer insurable because maybe you had a heart attack or survived some type of cancer, your term insurance should come with that conversion privilege. So right now, you're a preferred risk. Right now, you're more insurable than you will be 20 years from now. So protect that future insurability by making sure that your term protection has a conversion privilege. It's really important. When I'm looking at my clients' planning needs, I know when Eric, he and I talk about that often, what is the right product? Sometimes the lowest cost product, if you're looking at $1 million 20-year term, and one carrier says they want to charge you $400 a year, and another says they want to charge you $450, is there a reason why you should go with the $450? If the cheapest doesn't have a conversion privilege, then it is worth looking at the other coverage because of that future insurance need. With term insurance, at the end of that term period, if it's 10 or 30 years, it's like you rented it. There's nothing left at the end. You pay your final premium and it's gone. With return of premium insurance term, you pay your premium all the way to the end of the term duration, and if you don't convert it or carry it forward, you get your 20 years of premiums back. And like I said, somewhere around 1%, premium plus about 1%. It's not a great tool for growth. It's not the intention of it. There are specific planning reasons why you might choose return of premium. That's really the talking points to term, kind of at a 30,000 foot view. And there's obviously there's any number of riders you can add and any other reasons to discuss specific use of term in a planning design.
So why don't we stay tuned for part 2 on permanent insurance. We'll see you later, and if we can be of help, please reach out. Thank you.